Baby-faced social media pioneer Mark Zuckerberg has taken Facebook from his dorm room at Harvard to a worldwide phenomenon.
Here was someone who was a real engineer, who was one of those wizards who stay up late making things that excite them and they believe will change the world.
His creation transformed the web. The site now has over 500 million users.
I think most people still haven't really digested the scale of Facebook or how quickly it's grown.
Mark likes to do things his way. Look how successful it's made Facebook today.
One of the most successful companies in the world. But how much is Facebook really worth? That's the $50 billion question. Good evening, I'm Betty Liu, and welcome to our Bloomberg special report, Facebook, the $50 billion question. You've seen the headlines, Goldman Sachs buying a $450 million stake in Facebook. We hear the deal is not done yet, but when it is, we are told it'll make Facebook worth $50 billion. A company worth $50 billion. Take a look. That would make Facebook worth more than Yahoo, FedEx, eBay, and Nike. Some people say that it just doesn't add up, but Goldman Sachs and the smartest of the smart money are betting that it's just the beginning. Most of you know what Facebook is. It's a social networking website where people connect with friends, they share pictures, and they play games. Facebook says it has 500 million active users, and more than half of them, 250 million, log in every day. So is CEO Mark Zuckerberg's vision really one of the most valuable companies in the world? We'll have much more on Zuckerberg and how he got to this point coming up. But first, that $50 billion number. Corey Johnson has been digging for information from Bloomberg's San Francisco bureau. And Corey, $50 billion, how is that even possible?
Well, I mean, that's the question. The Goldman Sachs $450 million investment, reportedly already oversubscribed, that gives Facebook that $50 billion valuation. It's a hard figure to get your head around. Yes, it's more than Dell and Time Warner and Yahoo. We've heard that. And yes, it's less than ExxonMobil or Cisco. But we know how Facebook works, right? It creates a computerized social graph and uses it as a platform for advertising and commerce. But what do we really know about the economics of the business of Facebook? Well, internet usage statistics actually tell us quite a bit about the usage and the growth of Facebook. And for a company just imagined in a dorm room 6 years ago, it's become a dominant internet business. The statistics are really amazing. I mean, by this fall, 10% of the time spent on the internet was on Facebook. It's more than Yahoo's 9%, 2.5 times Google's 4%. And dig this, 70% of internet users in the U.S. were on Facebook last year. More than half of them visiting the site daily. The company has, as you mentioned, 500 million active users. So it's big, it's powerful, it's growing. But is it worth $50 billion? Well, Bloomberg News learned that Facebook had $2 billion in 2010 sales, almost all of that from advertising. And we know the company is profitable, but we don't know anything about the profit margins. We know nothing about cash flow generation. Given all that, a $2 billion valuation seems extraordinarily high. Sort of $2 billion sales, $50 billion valuation seems really high compared to other companies. So Facebook valued at 25 times 2010 revenues. Compare that to Salesforce.com, trading at 12 times revenues. Google, 7 times. Netflix, 5 times revenues. Investors at this phase of Facebook will have to believe the company is going to grow and grow quite a lot to fill the $50 billion valuation. And the question for those investors has to be, how? Betty?
How do they do that? As those numbers that you just quote, Corey, It sounds pretty rich for what you're getting right now. Corey, just stay with us because I want to bring in, though, some of our guests for this hour. To help answer that $50 billion question, we've got two perfect guests for you. Paul Kudrowski is an investor, and he writes one of the most popular financial blogs out there. It's called Infectious Greed. He also blogs on Bloomberg.com. And Gene Munster, tech analyst at Piper Jaffray in Minneapolis, is with us as well. Munster covers companies like Apple, Google, and Yahoo. And though Facebook doesn't have to release the numbers yet because it's a private company, he knows a lot about Facebook. And Gene, his reports are widely watched in the market community. Paul, let me just start with you, though, first, because Corey ends with a very good point. How does Facebook live up to this $50 billion valuation? Does it?
Well, the thing to keep in mind with Facebook is that it's not just the raw revenue number, it's the growth. I mean, and so there's two things. One is you're paying up for growth. So you're paying up for something in excess of 70% year-over-year revenue growth. So in the context of a company growing that quickly, who's a leader, you lose a leading company in a marketplace where really there's actually really no one else with anything like the position that Facebook has.
No, they've dominated.
Right. So it shouldn't be very surprising that you're paying not just a premium for the growth, but you're paying a premium for the dominance. And so in that context, paying roughly 25x current year revenues and something more like say 18x, 15x next year's revenues, quite honestly, doesn't really trouble me that much. I mean, as perverse as it might sound, I think we're getting hung up on the wrong number. The right number to think about is how fast is this company growing?
Documents obtained by Bloomberg show that Goldman can sell its shares without letting its other investors in Facebook even know about this. Joining us now for more on this unfolding story is Bloomberg contributing editor Bill Cohen. Bill is currently writing a book on Goldman Sachs. And also still with us is Paul Kudrowski. He's a Bloomberg contributing editor as well, and also editor of the blog Infectious Greed. Gentlemen, thanks so much, Paul, for staying with us. Bill, I know we talked earlier this morning, but what do you make of this latest development? In a way, that's business as usual on Wall Street.
Absolutely. I mean, I bet every private placement document that exists on the planet at this point has that language stuck in down at the bottom about how they can sell the shares and they don't have to let other shareholders or investors know. So that's pretty standard, although it doesn't read particularly nicely. But nothing out of context reads particularly nicely.
Well, I mean, Goldman Sachs is looking out for.
Of course.
Goldman Sachs.
As any underwriter, any private placement agent would, yes.
Now, both of you are quite skeptical in some ways about this deal, about Goldman, being in Facebook. And I know, Paul, you've written recently on your blog that basically this deal is the kind of, quote, regulatory arbitrage that shows why the financial sector remains a rogue force in the U.S. economy.
Right.
Strong words.
Strong words. Well, I mean, it's exactly the kind of thing. Think about one of the reasons why this SPV, this vehicle via which Goldman is making this investment exists. It exists to circumvent a specific regulation intended to prevent private companies from having more than a predefined number of shareholders, specifically 500 shareholders. Leaving aside whether you think 500, 200, 1,000 is the right number, the point is a regulation exists that this SPV allows Goldman or whomever, it's not even Goldman specific, to circumvent. And there's a reason why that exists. It's intended to exist because the idea behind it in part was that we were trying to prevent shareholders in private companies, or allow shareholders in companies to have the sort of the facilities that shareholders in public companies do, which is to say, audited statements and full transparency. And we don't get any of that, and yet we're having exactly the same problem. We're having this incredible explosion de facto in the number of shareholders in Facebook via this SPV, and yet no one seems to care that this is fundamentally about arbing away a real
surely
business.
This has been happening before this Goldman Facebook deal. It just so happens that now it's Goldman, now it's Facebook. Everybody's watching this then.
But it's more than that, though. It's that we're putting together a recipe for how we can consistently and predictably and run a particular set of regulations. And in the context of what's happening, say, for example, with Second Market and this rapidly becoming much more liquid marketplace for secondary shares, that's troubling insofar as you care whether or not there is oversight for U.S. public market. And if you're in the camp that says, it doesn't matter, caveat emptor, that's a different issue.
Bill?
Well, I think, I think the truth is that the SEC is now looking into this. I mean, I think they were looking into it 2 weeks ago as trading in this Second Market, picked up and more former employees were selling their shares and more stock was getting into the hands. I mean, it was getting close to 500 anyway. I mean, Goldman would argue we're one investor. We're like a private equity or a venture capital. Why are we any different than Accel Partners, for instance?
The SEC purview, though, is still limited. I mean, it is still essentially a private company, right?
Well, but if there's 500 shareholders, which they're going to figure out whether there are, I don't know how difficult that is, by the way. That seems like it'd be fairly easy to figure out. Right. Once they figure it out, they could force Facebook to go public.
Right. And then you unbundle the SPV and you say, de facto, you are actually a public company. It just so happens
they may have had the 500 just from former employees selling shares and other people buying in, who are part of the Second Market system.
But take a look at the flip side of this, though, right? I mean, the fact that they have gotten Goldman Sachs into the company, it provides, does it not, some more liquidity for the current Facebook investors that might want to be selling their shares? It provides a market for them.
I don't know about that, Betty, because Facebook refuses to answer what they're going to do with the money, other than to say, they're opportunistically going to use it. I mean, if they're not going to use it to either, buy back some of Mark Zuckerberg's stock or other employees' stock, I mean, if it's just going to sit in the company, then the existing shareholders are not going to get access to this money. This, however, is a huge branding event for Facebook. If they can get Goldman Sachs to say their company is worth $50 billion in the private market, I mean, what better validation do they need? Talk about huge street cred for Mark Zuckerberg in Silicon Valley.
And at the same time, there's a deeper issue, which is that it favors certain investors over other investors. So specifically, if you join Facebook after 2007, you don't actually have shares that you could sell into this or sell into the secondary market. You have RSUs, restricted stock units. Right. And so you're not privileged to even part of this transaction at all. So really what it creates is this kind of shareholder caste system inside of Facebook, which I think could become incredibly dysfunctional. So.
Okay. And by the way, it's not so great to buy into this Goldman deal either, because you're locked up for 3 years. I think 2 or 3 years.
It is about 3 years.
Yeah, right.
Bill, thanks so much for joining us. Good to see you again. And also Paul staying with us throughout this hour. But up next, it didn't take Mark Zuckerberg long to rise to the top of the business world. But how did he get his start? You're going to see how Hollywood's version of the story after the break. And also we take a closer look at the rise of this entrepreneur.
You never split up. How did you know that? It's on your blog.
Well, it's not only Hollywood and the media that have been captivated. Many who have done business with Zuckerberg think he's brilliant.
My first impression was that he's a genius, and it did not change since that time. I mean, really, given his age and his achievements and his brilliance and his learning curve, it's pretty amazing. He's a pretty amazing individual.
Amazing and a genius. Well, just how amazing are the Facebook founders' accomplishments, and what drove Mark Zuckerberg to turn the business and online world upside down? Bloomberg Game Changers takes a look.
Now we want. This is Mark Zuckerberg from his own Facebook page.
A hoop again, another hoop. There's definitely, I felt a hoop. Yeah.